Welcome to the Daily Insights That Matter. Now, at the start of 2022, India's overall forex reserves stood at $633.61 billion. However, India's forex reserves had declined sharply ever since Russia invaded Ukraine in late February, when the imports got costlier globally due to the high energy and other commodity prices. Now, this necessitated the higher requirement of reserves for trade settlements. It's no secret that the RBI has been selling dollars from its reserves to ensure that there is no sharp decline or depreciation in the value of the rupee. However, foreign exchange reserves are finally up for the fifth consecutive week. Let's discuss this today. Now, according to data from the RBI, India's foreign exchange reserves increased by $2.91 billion to $564.07 billion during the week ending December 9th. Now, the largest component of the foreign exchange reserves, that is India's foreign exchange currency holdings, increased by $3.14 billion to $500.12 billion. However, the gold reserves fell by $296 million to $40.7 billion. Now, the foreign exchange reserve is like the health meter of an economy. If a country has a good chunk of foreign exchange reserves, its financial condition is assumed to be very sound at the international level. Now, this increase in foreign exchange reserves has been brought about by specific investment flows to Indian corporations, increasing remittances, and a declining dollar index. While there is an uptrend in the forex reserves, we remain wary of the sustainability given the global economic backdrop at this point. The GST authorities have issued around 50,000 show-cause notices to several companies and partnership firms across sectors following the findings of an audit exercise that they started in this financial year. Now, this is the first of its kind comprehensive audit exercise since the inception of the GST regime. Now, the show-cause notices have been served after scrutinizing several documents during the audit under different sections of the Central GST Act. The notices served are for different reasons, which include misdeclaration, tax not paid, short payment, wrongly availed input tax credit, incorrect classification of goods or services and export items, mismatch in sale and purchase of items, and so on. Now, until September, around 20,000 notices had been served to firms where inconsistencies were found. Over 30,000 notices have been issued since then. Out of a total of 1.4 crore registered GST taxpayers, the GST department is learned to have scrutinized about 1 lakh GST registered accounts and accordingly picked them for auditing. The GST department follows certain key parameters for selecting cases for audit. They have tried to cover evasion-prone sectors and have also considered inputs given by the Commissionerate of Tier 1 and Tier 2 cities. Now, the state GST officials too have started their audit exercise from July amidst a revenue deficit as the compensation cess by the central government ended on June 30th. While the term show-cause notices may seem negative in its true sense, the audit exercises conducted by the GST Council are significant as they help detect irregularities and fix business issues and also improve returns. So what does all of this news mean for you? Our foreign exchange reserves have been on an upward trajectory for the last 5 weeks, which is a positive development. We believe India has adequate foreign exchange reserves to combat any external shocks. This will have an indirect positive impact on you. The GST audits are being carried out with the intent of bridging any revenue leaks, streamlining processes, detecting irregularities, and helping fix business issues. This will therefore have an indirect positive impact in the long run. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.